Hi guys, it's Thomas here from COTBASE.com. Welcome to a weekly COT review. Today we're going to be analyzing the 33rd Commitments of Traders report of 2024. And as usual, we're going to start off by looking at the largest changes in commercials net positions. Before I jump to the review, just a brief reminder for those who are new to COT analysis. Here at COTBASE.com, you'll find a lot of educational material. Not only do we have these in written format, but we have some very useful videos as well. These videos can guide you through the analysis process step by step. But of course, if you have any questions, feel free to comment underneath the video or send us an email to info@cotbase.com. Also, if you like this video, the content, please hit the like button. And if you have not yet subscribed, consider subscribing to our YouTube channel so you get notified when I post another video. Thank you. So the first market, as you can see, is soybean meal. We are, of course, looking at the classic COT report type, which has the longest history of COT data. And we are analyzing the futures and options combined data. So everything in futures and options data will be in this report. So let's get started. Soybean meal on top of our list with a 20% change in commercials net position. You can see there's a 21% change in large speculators and a negligible 2% change in small speculators net positions. So this change can be witnessed on the chart over here. If you look at it, it's definitely a larger than average change. And I'd say in the past 1 year, it's probably top 3, top 5 bullish COT change signals. And what's good about it is that it's coming at a point in time when the market is declining. As you have might have heard multiple times in the past, that I actually like COT change signals pointing in the opposite direction where the market is currently headed. Those tend to be a little bit more successful signals. So for instance, here you can see there was a brief period in April up until early May where we saw soybean meal do some strengthening, and as that happened, we were getting larger and larger bearish COT chain signals. Now the market is coming down and we are seeing bullish chain signals, and this one seems to be the largest, suggesting we may see a bit of a rise early next week. These COT chain signals, of course, can be effective in the near term. Here's another example of a bullish chain signal. This is the time when we actually get the data from CFTC. What a wonderful point in time to go long. Of course, it wasn't as large of a signal as the one we have right now. Nevertheless, it was greater than average. Right now, we have a much greater change signal in the market. Moving to a 5 years chart, we get a chance to examine stress levels in the market. Here you can see that we are moving towards bullish COT extreme levels. We had a significant one back in February, a very, very large one that was successful, pushed the market higher, but we're back in the decline mode. Soybean meal is losing value, and of course we're not surprised to see traders starting to shift their positioning accordingly. Now, of course, even this recent example from February suggests that we may need to wait a couple more weeks, month, possibly before reaching a level of an extreme where we can expect this market to start rising. Moving to the next market, this is the Japanese yen. Of course, an important market these days. A lot of talk about it. I told you that this bullish COT extreme signal was very, very successful in locating this bottom in the Japanese yen. The Japanese yen has reacted and we have seen a rise. However, there's a rapid shift in traders' net positioning, and that's just something that would draw caution to anybody expecting the Japanese yen to suddenly move much higher. I'd say this can be considered a relative bearish COT extreme. I mean, the fact that we have this 180 report reading in commercials, 180 report reading in large speculators net position, I think tells you that. So it's interesting how dynamically traders have changed their net positions. Of course, We always start with the COT change analysis, and I know I ran forward a little bit. So coming back over here, the 16% change can be witnessed here. However, the change signal from a week ago was greater. However, the timing when we saw the report was not necessarily the best. As you can see, just after the report date, 1 day later, we see this larger drop in the price. So COT change signal analysis may not have been too easy to act upon. And again, let's not forget that the broader picture was very, very bullish for quite some time. Moving on to natural gas, here we have a 15% change in commercials net positions. Again, a bit larger than average change size, but nothing too unusual. Just by looking at it, I'd probably just pass. I don't really see too much exciting in that information. And then, of course, we have the COT Extreme, which again is boring, I'd say. Just look at this horizontal line. You can see that the most bullish COT Extreme and the most bearish Extreme are here, and this present reading is somewhere in between. I don't really see much of a value in that, so I would just say pass and let's move on. And that's what we're going to do. Moving on to large speculator COT Extreme analysis, we have Oats, a very small market here. Small meaning not always do we get reports. As you can see, there are periods of times when there's nothing happening. However, it's on our list, and it's the top one with 341 report extreme in large speculators net positions. That can be seen over here on the chart. It is a unquestionable bullish extreme, and although we do have periods when there's no report, I'd say Oats historically has produced some really good signals, and I would definitely have my eyes on it if we're looking for an opportunity on the long side here. Cotton, a soft market to continue, 261 report extreme in large speculators. Once again, we are talking about a bullish COT extreme signal. However, as you can see, it's been building up for quite some time. So bullish extreme after bullish extreme. And you can see the market is not yet ready to rise, which of course is natural. We do see these many times. So, COT analysis is a wonderful tool, something that should be in everybody's toolbox who's trading, investing. However, it's not meant for pinpointing exact entry and exit, rather tell you a little bit about traders positioning, which of course can be interpreted as stress in the market, because once traders are building up a huge position on one or the other side, that can tell you the story. Something's going to be changing very, very soon. Now, Japanese yen we talked about, so we're going to jump over that and reach feeder cattle with an 88 report extreme. It is again a more bullish COT extreme picture. You can see that 88 report extreme was not that very long ago, sometime early this year. And as you can see, it was a very, very successful signal pushing the market higher. We are roughly at those levels. That just tells me that this bullish trend that's in place can continue on in the next couple of months ahead of us. One interesting fact, just to remind you, in case of livestock markets, the correlation for small speculators is with commercials, because there's a lot of commercial participants in feeder cattle who don't reach those reporting limits. Thus, they are categorized into the non-reportables, or as we call them, small speculators. So that's why you see a correlation between the red and the blue line. Now, I thought about something interesting for the last part of this COT review, where I will show you our own indicator, the iCOT Intraday Indicator, a tool that we developed after many, many years of research to come up with an indicator that mimics COT analysis, try to find stresses in the market, but not in the long term. Of course, CFTC publishes the commitments of traders reports on a weekly basis, but our own indicator is capable of giving this unique perspective on live charts. This is a gold 1 minute candlestick chart, and we differentiate between we call them speculators, commercials, just because it's easier to differentiate and know who and what the correlation between these lines and the signals are. However, I should emphasize that it is not the report from CFTC. It is our own tool, but commercial signals are shown with a yellow diamond underneath the candle if it's a bullish signal, above the candle if it's a bearish signal, and speculators signals are represented with the candlestick changing its color to blue. And the best for both is when we have commercials and speculators at an extreme at the same time. That's when we get these vertical lines. We call them stripe signals. Red, of course, for bearish signals, green for bullish signals. And we do have this indicator develop even more, the AfterSignal, that will filter out a bunch of these signals and tell you when it's a good time to enter. So what I'm going to do, just to be fair with the 6 markets that we analyzed, I found this tool online, spin the wheel app, and I just put in the 6 markets over here, and I'm going to say spin the wheel, and let's see which market we are going to analyze using the iCOT Intraday Indicator. Oats. Okay, it's going to be a difficult task as it's the market with the least amount of magnitude. It's not a huge market, but let's give it a try. So let's find Oats futures. There we go. This is a daily candlestick chart. Let's start over here. First off, we're going to give the chart the score line, the most important part of the indicator, the iCOT scores. And then we are going to say, let's start off with the signals. This is the basic version, and this will show you those extremes in the market. And I would say, just by looking at this, that this seems to be quite the catch. So just around over here, 2023 April, we have this beautiful vertical stripe signal in the market, signaling a move upwards, which does happen, and it catches the entire move up until August, late August, early September of same year, 2023, where we get these bearish signals, these red stripe signals. Then it takes us down to the lows once again, and then April of this year we get this bullish stripe signal, and then we see the market rise. Now if we take this off and move to the iCOT with AfterSignal, then it shows you, again, by default this indicator is set up to react only to stripe signals, and when you are in a trade it will not react to other signals. So it's as you can see, this green line, we call it a stop line. It's acting on the market. So what we can do is say, hey, let's put on another one. Let's have 2 indicators at the same time, and I'll say just to stay conservative, we're gonna say we're only interested in the strongest signal, the stripe signal. So we're gonna say one of them catch long signals, and the other one we're gonna say catch short signals, stripe short, and there you go. So it filters out signals. Especially here, you can see we have 2 stripe signals, but it will enter the market after the second one. So that's what the iCOT intraday indicator does. Now, of course, you can bring this down into the shorter time frames. Let's see what it can do on, let's say, a 15-minute candlestick chart. I mean, again, it's Oats, so it's not much data. Maybe a 1 hour would be better. There you go, 1 hour. It catches this top. You can see on this chart that we have in front of us, there's nothing other than this one red stripe signal. But of course, if we go over here, you can see, actually, it's an interesting example, because you can see that we have this stripe signal, but we will not enter for quite some time. Not that it was a successful one. I mean, again, it's not the holy grail, but hey, it does catch this top, So Again, maybe oats is not the most popular market, I know, but this indicator is great on all sorts of market, including stocks or cryptos for that matter. So like we can put a Tesla stock over here, and there you go. That's Tesla with only stripe signals once again. So if you want to look at Bitcoin, then we do have that as well. So a lot of markets analyzed with the iCOT intraday indicator. Once again, if you come to the home page indicators, you'll find all our indicators. The Pro focusing on classic COT analysis, it's only available in NinjaTrader, and then the iCOT intraday indicators, the basic and the one with AfterSignal, focusing on shorter time frames. So I believe combining the two worlds, classic COT analysis, really understanding the broader picture, and then taking the iCOT intraday indicator to help you enter and exit the market is a great combination of our tools. Thank you so much for your attention. I hope you enjoyed this video. If you have any questions, feel free to comment, send me an email, or of course we have a Facebook channel and Instagram, Twitter, all sorts of social media representations already. So check us out over there, and see you in my next COT review. Have a wonderful weekend. Take care. Goodbye.